Hello everyone, this is Martin here, and it's Sunday evening, and I'm just putting together this recording for everyone here using new software, new recording software, and we're trying to still fine tune the system here, but let's see what happens. And we're looking at the charts again for the upcoming week, October the 5th to the 9th. Okay, and we're going to start as we always do with the Euro USD. Here you can see the Euro USD daily chart, and looks like the theme for this week is we're in mostly all the major currency pairs are in triangle consolidation patterns. You can see this huge triangle right here that the Euro USD is in. Again, here's the upper trend line, here's the lower trend line, and for all those students out there, I'm including some new information on the charts to help all of us, and you can see some of the new information with the red crosses and green check marks. Just basically, I've changed the charts just for a wee bit. I want to see if this helps some of the students out there, and also will help me become a better instructor. And that's obviously the overall goal for myself, is to become a better teacher and mentor to many of you who have followed me from the beginning since I started teaching through the school boards. So hopefully, as we go through these pairs, things become a lot clearer. And we're looking at the charts. We're looking at basically the swing chart setups here. This is the 50 SMA. The red line here is the 21 EMA, and this light purple line is the 8 EMA. So again, that's what we're looking for. We've got the 8 EMA, we've got the 21 EMA, and the 50. Okay, and last week I said, oh, okay, I'm sorry, one more thing. We've got the red vertical line here. This is where we started last week with the red arrow. Okay, you can see that right here. So last week I said we were in a sell bias. That's what I was looking for. Price went up a wee bit from last week, from the trading day last week. Price went up just a wee bit above the 8 and 21, but then came right back down, and the 50 SMA acted as support. Priced and bounced off the 50 and went back up again. So so as far as the sell bias, basically it did go down, so we're correct there. And I mentioned use the 8 EMA as resistance. The 8 EMA right here did not hold. Price went up a little bit, so if you entered a trade after this big candle right here, this big white bullish candle, if you held on to the trade, you probably would have incurred a loss, depending on where your stop loss was. Okay, I indicate that right here. So again, watch, and I mentioned last week, watch the 50 SMA for direction and support. Obviously, it held. Price went back up, and for those people who took buy trades, that was great. Okay, so this week here we're looking at again, the price is in a triangle consolidation, and we're waiting for either a breakup up or down, a breakup above the 113.50. So price would have to come all the way up to here, break out and close above that, or price would from here break the triangle consolidation, come back and break below the 11100 here and close below that for us to take a trade to the downside. The MACD here you can see is at 0, so basically there's no direction. Okay. Now the next chart we're looking at is the British Pound USD daily. Last week I said we were in a downtrend, and that is correct. Price just kept going down a little bit further. But however, I cautioned we were at support, and I asked everyone to wait for the bounce, and it actually bounced off. You can see with this green candle right here. So price bounced off this area right here. Again, if you look to your left, previous swing low. So price did bounce higher, and if you would have taken a trade, even trade after that, you would have made some pips there. I mentioned that this was a possible counter trend trade, and that would have been excellent for you. Okay, so now also last week I said wait for breakout. The other thing was you could wait for a breakout sell trade below the 151.20 right here. That did not happen. You can see right here the X, red X mark. And so again, when price does not break below the 151.20, again, you would have waited for the bounce and gotten in at the open of the next candle. Would have made some pretty good pips for counter trend trade. Okay, this week price is in a downtrend. Okay, I still say it's a downtrend. However, we are in a pullback. Okay, so there is an opportunity for short counter trend trade. In other words, again, this video is a little bit late in getting to you, but we have now crossed the 8 EMA, and again, I would if this candle holds, price will probably end up going higher to at least here. To the 21 EMA, or at least to the 153.20. At that point, you can look for a sell trade to the downside, looking for bearish evidence, okay? Or if price goes even higher, look to sell below the 154.50 right here, okay? And the MACD is below 0. Okay, next we've got the Australian USD daily here. Last week I mentioned that we were in a very strong downtrend. You can see price was coming back down, 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 down. And last week right here, even though price was right here, basically we're still in a downtrend. Although we are now, price is now caught in a triangle consolidation again. You can see price has bounced off the bottom trend line and it's on its way higher. It's also closed. Price is also closing above the 8 EMA and now has reached resistance at the 21 EMA. Last week, I mentioned watch for a retest of the 8 EMA and the bounce. So price was right here, the start of last week's trading. And I said watch a retest of the 8 EMA and bounce. And price did, it did actually... no, it did not go up to the 8 EMA, did not bounce off. Okay, so that's why I have an X over here. And watch for the breakout below the 6,900. Price did not go below the 6,900. So if price does not go below a certain area that I mentioned, then price obviously has to go the other way. And in this case, it did. So if you would have taken a buy trade anywhere, let's say after that candle right here, you would have made some pretty good pips, okay? So I still expect price to go possibly higher, maybe all the way to the 7,200 area, and that's where you want to really watch out and see if the 50 SMA, this line right here, holds. If it holds and price bounces back down, then price may come back down further. If this does not hold, then the next, look at the area on the left side. That's your previous swing high. Price has to get above that area for price to start reversing and going higher. Okay, so just watch out for this area and the 7,200 area. Okay. Now we are looking at the New Zealand USD daily. And this is interesting. Prices come back down, down, down. It just doesn't want to go any lower. And I mentioned that last week, caution, it failed to make a new lower low. So in other words, last week, if price would have come back down below this low right here, it would have made, then price most likely would retest the previous swing low right here. But price seems to be going higher again. We are now at an area of confluence, and I'll explain what that is in a second. So let's go back to last week. I said we were trading in a sideways channel. We were basically sideways. Caution, failed to make a new lower low. It did not make a new lower low. And if price goes higher, sell below the 6,500. So price is going higher, and we're looking for this area to hold. When I say confluence, I mean there are many clues and factors that will prevent price from going higher. And these many clues all together is called confluence. One of the clues is the 50 SMA. You can see that right here, okay? And this is also a major resistance area right here. 6,500 is a major resistance area. 6,500 is also a major round number. So price may go up 20, 30 pips above that, but then may come right back down. So it may be what's called a false breakout. So I would just wait for this candle to close. In other words, today's candle. Okay, and then keep watching. If price goes higher, this is a major price reversal area. You can see I've got that marked on the chart here. This would be a major resistance, and a price would either bounce down or higher from this major previous swing high. So just keep your eye on that as well. So for this week, price is at a major resistance. I mentioned it's confluence. Watch for a breakout. In other words, price has to break out well above the 6,500. In other words, maybe price has to close around the 65.30, 65.40 before I would be comfortable taking a buy trade. Okay, or watch for a price to go up a little bit higher and then bounce back down again. Again, watch the 21 EMA for direction and support. If price will then if price comes down, then you want to watch the 21 EMA. The 21 EMA has the support keeping price up for price to go higher. If the price comes down in the next couple of days below the 21 EMA, then price will fall down and perhaps retest some previous swing lows. Okay, US CAD. Now, what are we looking at here? Again, the start of last week right here. Last week I said we were in a major uptrend. However, we were near resistance, which is correct. I asked everyone to watch out for a breakout above the 133.50. It did not. Okay, did not break above a 133.50. Oh, it did. Just a second. Hang on. 133.50. Yes, it did. Broke out, and if you would have gotten in at the next candle right there, okay, right there, you would have made some pips if you were like basically end of day trader. In other words, opening a trade one day and closing it at the end of the day or the next day. However, holding on to the trade would have most likely ended up in a loss because you would have been down here again. Now, the other thing I said last week, watch out for breakout. Okay, I'm sorry I mentioned that. And watch the 8 EMA for direction. Price broke in the next couple of days. After the opening of the trading week last week, price closed below the 8 and eventually went all the way down. So you still would have had an opportunity to take a sell trade and made some pretty good pips there. This week, again, we are in a weak uptrend. Okay, we are in a pullback phase, so watch out. Here's a major area of previous reversal area. If price comes down to here, it's certainly, I would look at taking a bounce trade to the upside, but you can also wait for a breakout from this area to the downside. Okay. Next, the USD Swiss franc. Okay, USD Swiss franc daily chart here. Last week I said we were in a weak uptrend. Price really wasn't going anywhere. Watch for a breakout above the 98.30, which is right here. It did. Price, as of the start of last week, did not break above the 90.30. And if price does not break above the 90.30, it would most likely start going down, which it did. Okay. Now, price may bounce back lower. And price did, okay, off the resistance here. If you would have gotten in at the open of the next candle, like right here, you would have made some pips. And the other thing I said, use the 8 EMA as support. It did not. The 8 EMA did not hold. Look for bullish evidence a few days after the week started. Yes, the bullish evidence was the very first white bullish candle after the bearish candle. If you would have gotten in right there with the green arrow, you would have made some pretty good pips, as it almost went right up to the previous resistance as well. So this week we're in a triangle consolidation. Wait for a breakup either to the upside or downside. I would just kind of wait. Price is directionless right now. It's not going anywhere. Okay, finally we come to the USD Japanese daily chart. Last week I said price was at near resistance. Price bounced back down off resistance. At the open of the next candle, you would have made some pips, not too many, and then price just basically went sideways. So that's it. Just wait. It's in a sideways consolidation.